And I've always thought of Bitcoin as a very binary investment, whether it goes from 80 to 8,000 to 6,000 to 3,000 to 13,000. It doesn't matter. This is either zero or it's millions.
An avalanche of money is coming for Bitcoin. In this video, Chamath Palihapitiya explains why, to him, Bitcoin is really a binary investment. It will either go to zero or over time be worth millions of dollars. And due to an economic phenomenon called the Lindy effect, the likelihood of Bitcoin one day being worth millions is getting more and more probable. Many will know that Chamath Palihapitiya has been a long-time Bitcoin bull. However, what many do not know is that at one point, Chamath himself owned over 5% of the Bitcoin supply and has an average buy price of just $80. Chamath has been an incredibly successful investor in technology and innovation, so it pays to hear his opinion. In this video, we will go over the core fundamentals of why Chamath believes there is an avalanche of capital coming for Bitcoin and why he thinks all technology inevitably heads towards decentralization, and finally the economic phenomena called the Lindy effect. Make sure to stick around to the end of the video where we will go over the details of the Bitcoin supply short squeeze that is playing out, as well as the huge institutional Bitcoin purchases that have just taken place over the last 2 days. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or giving the video a like. It's free and you can always change your mind.
I think Bitcoin needed a moment like this for it to be relevant. In 2013, I bought a lot. And at one point, I think I had almost 5% of all the Bitcoins. My basis is about $80 a coin. I've never bought more. Most of my Bitcoin now sit with a company, and they use it for trading purposes. They use it to run a bunch of other strategies, and I did that mostly for safety and security and peace of mind. I didn't want to deal with it. I wanted to own equity in a business. That equity can be hedged, that equity can be tax structured advantageously, and then it allows them to run a big business which generates cash, and I can get a cash and dividend stream. So I have not bought since I initially basically wrote that article for Bloomberg in 2013. My thoughts are the following. Right now, I think what you're seeing is that it's still a speculative instrument, and it's too speculative for it to be reliable. So if you're going to make the case that it should replace fiat currency, well, one thing you have to look at is the volatility of the US dollar, and you can't replace it with something that's 9 sigma more volatile. It doesn't work. And the reason it doesn't work is that it's too, again, going back to what markets are important. The only market that's even more important than the debt markets are the currency markets. Mm-hmm. And what you see is enormous amounts of liquidity where 5% moves, so 500 basis point moves, are newsworthy. Well, those 500 basis point moves, in the absence of some massive exogenous event, take years to play out. And in that, there's value because it allows more market participants to be active in that market so that they can use it as a critical pillar of how they run their business. But now all of a sudden, if you have 2,000 basis point moves a half hour, you can't effectively use it. And so what it does is it pushes it into this ghetto of day traders and speculators. And right now, that's where we are. We're in that ghetto. And you need to get out. And the way that it gets out is that you need to flush the speculators and day traders out. And you need to have still some basis of interest from long-term holders. And then you need to have it slowly look like the traditional infrastructure could really implode. So again, I go back to, we are driving slowly, but we are driving towards a top of a cliff. And then we're going to drive much, much faster down that cliff or down that hill. And at the end of it is a huge brick wall. The way we avoid it is by pivoting to a resilient economy where we introduced inefficiency and cost and inflate our way out of it, or debasement. The path dependence for Bitcoin is if it looks like path 2 is likely, it will really emerge as a flight to safety. And over the next 10 years, where this trajectory is going to take shape, and it is a 10-year trajectory, you'll have a lot of time to vector into it to protect yourself and to hedge yourself. And I've always thought of Bitcoin as a very binary investment, whether it goes from 80 to 8,000 to 6,000 to 3,000 to 13,000. It doesn't matter. This is either zero or it's millions. Because what it will do is it will create a quasi-gold standard. It'll create an index, except instead of having to own gold, where gold is owned by central banks, it is an instrument that has value that's determined by and between its participants, and it's owned by everybody. So maybe the correct way to say this is that it's not gold, but in gold being gold 2.0, which some people have used about Bitcoin, what it does is it replaces the method of value transfer that you need for fiat money to be valuable. But that only happens if the US dollar looks like it's going to careen into this wall. So I think that's the bet. So the setup is here. So before, there was no path dependence, meaning you were speculating and not really hoping, because if you're using it schmuck insurance as I was, you were kind of hoping it would never come in. But now, if the probability was 1% that it would be valuable, unfortunately, the probability is now probably like 5 or 10%. And there's a real chance by 2030, we don't find a way to inflate our way out of this. And that the only way to break the back of deflation is essentially to create some quasi form of gold standard. But it'll be almost impossible to do that between governments and central banks. They'll never agree on an instrument and they'll never agree on an exchange. But then bottoms up, people could decide to do it.
So there's Chamath explaining why he thinks Bitcoin will either go to zero or be worth millions. The likelihood of it going to millions increases every day thanks to an economic phenomenon called the Lindy effect. For those that don't know what the Lindy effect is, it is a phenomenon observed by which the future life expectancy of an idea or technology is proportional to its current age. In essence, the longer period of time something has survived or existed, the increasing likelihood it is to have a longer remaining life expectancy. Longevity implies a resistance to change or competition and greater odds of continued existence into the future. Bitcoin is a perfect example of this. The longer that Bitcoin survives, not just as a payment system, but as the #1 crypto asset and the reserve currency of the crypto ecosystem, the higher likelihood that it will remain #1 and continue to live on. On top of this, Chamath recently explained his theory that all technology eventually evolves to become decentralized. This would further suggest that the legacy financial system will evolve into accommodating a decentralized Bitcoin. Listen here.
I do think that if you look at every platform innovation that's ever happened, so whether it's, we go from no print, to newspapers, to radio, to television, you've always first started with a pendulum that was very much firmly in the camp of centralized, monopolistic, or oligopolistic kind of early outcomes. And either through legislation or through innovation, then the pendulum swings to decentralization. That's typically happened, right? And you can look at all of these industries that's gone through that. So it stands to reason that technology will be not dissimilar to those things. And everybody says the argument is, well, no, because technology has these specific features of network effects and lock-in. But I think that betrays this idea that legislatively you can come and just basically destroy the China in the China shop and you have to just start all over. So it's likely that we're going to move to a place that's a healthier outcome for everybody.
An additional reason Chamath believes in Bitcoin is because of the younger class of investors that are beginning to enter the investment markets and move into peak spending. As generations move towards their peak spending years, generally in the middle of their lives, we will see inflows of capital into Bitcoin as generations such as Millennials and then Generation Z move into peak spending. Chamath points out that the younger generation of investors have no interest in investments like gold, but Bitcoin much closer reflects their values. Listen here.
Why would it not make sense to have a non-correlated hedge? For a small amount of, this is about buying insurance. It was the same reason why in 2007 and 8, the folks that bought simple insurance bought some
So,
CDS,
you might
look
as
like heroes.
buy gold. I mean, at least gold's got a 3,000 year, 10,000 year record of being a store of value. I mean, I think that's the other thing Buffett's saying. There's no reason to think this is a store of value.
I think that's a fair point, but I think these are not exclusive decisions. And, you know, for this younger class of entrant into the market, they probably don't want to buy gold. In fact, they don't want to buy gold, and they want to buy something that's much more digital and reflective of their values.
How do you feel, though, about...
As a millennial investor myself, I can vouch for this point. I would prefer owning Bitcoin over gold. The millennial generation is actually larger than the baby boomer generation in terms of population, and as both millennials and Gen Z move towards the peak spending stage of their lives, we would expect to see huge inflows into Bitcoin. A great argument for BTC in my opinion. Now, looking for some on-chain Bitcoin data this week, we are seeing a Bitcoin supply squeeze unfold as supply on cryptocurrency exchanges dipped to a low we haven't seen since mid-2016. A big reason for this was huge amounts of Bitcoin being moved off of exchanges worth billions of dollars, which could only mean one thing: institutions are continuing to buy. Now, finally, Chamath a few months ago gave his Bitcoin price prediction, and interestingly, it was exactly at the same price point that Bitcoin is currently now at, $39,000. This is Chamath's Bitcoin price prediction.
39,000. Where's it going?
I mean, can you play the clip in 2012 and 13 when it was at 200 and everybody was laughing at me on CNBC every time I would talk about Bitcoin? Where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know. 5 years, 10 years, but it's going there. And the reason is because every time you see all of this stuff happening, it just reminds you that, wow, our leaders are not as trustworthy and reliable as they used to be. And so just in case, we really do need to have some kind of, you know, insurance we can keep under our pillow that gives us some access to an uncorrelated hedge. And it's going to eventually transition to something much more important. But for right now, you're just getting all these data points that prove this thing. It's just the fabric of society is frayed. And until we figure out how to make it better, it's time to just have a little schmuck insurance on the side. And everybody's running in. It's just an incredible thing. I could never have imagined it.